What's going on, everyone? Welcome back to the channel. Today is October 10th, and man, do I have some thoughts to share with you guys. So NIO closed today at $6.71, down 10.05%. Yeah, you heard that right. Double-digit drop in a single day, and I'm watching my notifications blow up with people panicking, asking what's happening, and people saying this happened after I posted yesterday's video, or should I sell? But here's where I feel like we need to have a clear conversation about investor psychology and what actually could create wealth in the market. You know what's funny? People love buying stocks when they're ripping higher. People loved buying NIO when it was heading towards $9, or even think about all-time highs where it was in the 60s. Everybody wanted in. Now that it's at $6.71, people are like, should I even touch this thing? But if you look at where we were a couple months ago, we're already a lot higher. Warren Buffett said, be fearful when others are greedy and greedy when others are fearful. And right now there's clearly some fear in the air. And let me tell you why this pullback might actually be a gift. And I'm not giving you financial advice. I'm just giving you perspective. NIO has been on an absolute tear. We're still talking about a stock that was at $3 earlier this year. People made money, real money. And what happens after explosive rallies? Profit taking. It's not rocket science. The stock is down a little bit over 10%. Because traders are locking in gains. That's normal. Now let's be objective here, because you guys all know I don't do rose-colored glasses on this show. September revenue came in at 2.65 billion yen. That's up 9% year on year. That's growth, and here's the but, it missed Wall Street's expectation. The market doesn't just care about growth. It cares about beating expectation. In September, NIO didn't do that. But here's what I want you to understand. 1 month doesn't make or break a company. One earnings miss doesn't destroy a thesis. What matters is the trajectory, the infrastructure, and the moat that they're building. Let me talk about what actually got me fired up this week. During China's Golden Week holiday, NIO's battery swap stations completed 145,955 swaps in a single day. That's a record. Over 8 days, they delivered nearly 1.1 million swaps. That's a 37% year over year increase in average daily volume. Think about what that means. They now have 3,500 swap stations operational, with over 1,000 of those across the highways. This isn't just infrastructure, as I keep on saying. This is a potential moat. Battery swapping is faster than charging, more convenient, and NIO is just dominating this space. Can competitors replicate this? Maybe. Will it be easy? Absolutely not. And today, literally today, NIO announced that they're entering the Armenian market. Now, Armenia isn't going to move the needle overnight, but it shows geographic expansion, it shows efficiency, and it's adding to the network effect that they're building. Here's what really caught my attention though. WMG Financial, an investment advisory firm out of Knoxville, just increased their stake in NIO by 17.9% in Q2. They now hold $1.63 million worth of shares. That's institutional money. That's long-term conviction. And Citi, they put NIO on a 30-day upside catalyst watch. When institutions do this, they're expecting something. Product launches, regulatory news, macro tailwinds. This isn't retail FOMO. This is seasoned investors seeing value in NIO. After this pullback, we need to talk valuation. Wall Street has a consensus overweight rating on NIO with a mean price target of around $9. From today's close of $6.71, that's about 30% in upside potential. Now, am I saying that NIO is going to hit $9 tomorrow? No. Am I saying the path will be smooth? Absolutely not. But what I am saying is NIO is building something absolutely differentiated. They're blending hardware, software, and energy services into an ecosystem. Battery swaps, international expansion, improving daily metrics. To me, this seems like a long-term play. Look, I'm a NIO bull. I'm always transparent about that. But I'm also someone who respects the market. Near-term earnings will fluctuate. The stock will be volatile. There will be more red days, but if you believe in the thesis, if you believe in what they're building, then days like today don't really seem scary, at least to me. Days like today, they're opportunities, And I'm not telling you to buy. I'm not giving you financial advice. What I'm saying is that you should understand investor psychology. Understand why you're afraid of stocks when they drop, but you're euphoric when they rise. The best investments, the best things in life, oftentimes feel uncomfortable in the moment, in my opinion. NIO at $6.71 with institutional backing, expanding infrastructure, and a 30% upside target from Wall Street. That's a different target than NIO at $9 after a moonshot rally. Do your own research. Know what you own. And remember, wealth usually isn't built by chasing green candle. It's built by having conviction when everyone else is running for the exit. That's it for today's episode of Courtside Financial. If you guys found value in today's episode, make sure you hit the subscribe button, make sure you hit the like button, click the notification bell icon, leave a comment down below, and of course, share the video. Let's get this out to more people, serve a bigger audience, do bigger, better things. I'll see you guys in the next episode. Happy Friday again, and have a good weekend. This is Obi signing off of the CF Podcast. Goodbye.